Spencer, let's start with the housing market. Tell me your current outlook for housing in the United States.
It's not good. We are down 29% from the peak in terms of home values nationwide. Zillow's data says that we expect another 3 to 5% decline from here. So we're through the worst of it, but home values nationwide are still declining. At that point, once we hit the 3 to 5% decline from here, and that's probably around a year or so out, probably mid to late 2012, we expect home values to stay basically at that level, kind of kicking along the bottom for a couple of years.
Okay, let's break those down into components. First of all, why only 3 to 5% more, and why will that happen in 1 year, which strikes me as a relatively short amount of time to accomplish that?
In a lot of parts of the country, or I should say in some parts of the country, we've already reached points where the price-to-income ratio is very, very attractive. So home values have come down so much that really buying a home is a much better decision than renting. So for example, in Detroit, we're in that situation where it's just you ought to be buying a home, not renting. And so once you cross that kind of price-to-income and price-to-rent ratios at that point, we expect home values to flatten at that point.
Is that predicated on a continued economic recovery for that scenario?
We're forecasting kind of like most economists, sort of a middling recovery, kind of a relatively jobless recovery, if you can even call it that. Okay. In terms of the time that it will take to get from here to the bottom, kind of what the next 6 to 12 months will look like, what we look very closely at is the foreclosure backlog. The reason that we're in this situation is high rates of negative equity. I think it's around, I think close to 30% of all homeowners in the U.S. who have a mortgage are upside down on their loan. That combined with high unemployment is what creates foreclosures. Because if you're upside down on your loan and you're well employed and you can meet your mortgage payments, it's kind of an academic issue. It's concerning and disappointing as a homeowner, but it doesn't really affect your day-to-day.
You might as well stay and keep living in the home that you
exactly,
enjoy.
As long as you can afford the payments. But if you lose your job, or if your hours are cut back, or if your spouse loses their job, all of a sudden it's only a couple mortgage payments, missed mortgage payments before you start to face a foreclosure issue. Now, if you're upside down on your loan, you typically can't refinance, and you typically can't sell, because if you sell, then you have to bring a check to closing. So we look very closely at delinquencies and late payments on mortgages as a forward indicator of what's going to happen to home values down the road.
But why can that get cleared out in about a year?
Well, we're getting towards the end of it. So most of the loans that originated in 2005, 2006, 2007 that were going to go bad have already gone bad. And so there's still some more to go, to be sure. We're not through it, but you can really look out and sort of see the end of it.